Hello, this is Diana Sescolini, and we're going to start talking about Chapter 23 today. 23 is about what we call evaluating decentralized operations. So in order to understand this chapter, you really need to understand what we're talking about when we're talking about a centralized or a decentralized company where operations happening. So in a centralized company, all of the planning happens at the very top management and trickles down to the lower management. In a decentralized company, managers at each division or different units actually make the responsibility for their units. They become part of the whole overall, though. So this can be a good thing and this can be a bad thing. For the most part, we're going to look at how we look at the revenue and the cost for each division, and we're going to focus on decentralized operations. So here are some advantages of decentralization and disadvantages. As you notice, there's more advantages than there are disadvantages. I don't focus on this when it comes to testing, but basically the biggest advantage to decentralization is it allows the people who are closest to the actual situation or the actual processes to make the decisions. So in other words, if I have a manufacturing facility, it allows my managers at that facility to actually make decisions that affect it and not making decisions that for people or for processes that they have no knowledge of. So it's really actually a good thing. When we look at this type of accounting for decentralized, we call it responsibility accounting. And it basically says, okay, responsibility means who is responsible for different things. And for this chapter, we're going to look at three major types of responsibility accounting centers. First one's going to be called cost centers. The only responsibility here is over cost. The second one we're going to look at are called profit centers. Here I'm going to have responsibility over revenue and cost, because remember, revenue minus cost is my profit. And finally, we're going to look at something called investment centers. Here it's revenues, costs, and investments in assets. And when we get to that part, we'll talk about what exactly does that mean. So a cost center manager has all responsibilities for controlling the cost within his organization. Think of it as think of it like this. Think of it as the college or the university. Each of the universities have different colleges. They have different portions of the college. For example, College of Business at a university. And then it's made up of different departments. I've got the accounting department, the management, department of marketing. And then within one department, we're just going to be looking at that slice of the pie. Think of this as the pie. And when we talk about decentralized accounting, we're talking about just one slice of the actual pie. So remember, the whole thing about, let's back up a little bit. The whole thing about a cost center is we're only focused on the cost, reporting the cost. But remember, we still should be looking at budget performances and what we actually budgeted for those costs so that we can actually take a look at it. When we look at how to take a look at the accounting records for cost centers, think of it as a trickle up effect, because we're going to start at the very lower division or the departments of different plants. And this example here, if you can see, we're talking about Department 1 for Plant A. So this company here has got two plants, Plant A and Plant B. And so we're going to be working our way from these numbers here up to the top. So down here, I'm only looking at, this is the supervisor's budget performance for Department 1, Plant A. So each plant, A and B, has three different departments, Department 1, 2, and 3. And so we're going to look at a report for only Department 1 for Plant A. And this total report will be given to the plant manager for Plant A, where he'll then compile his three different departments, and that report will be given to the VP of production over the whole company, covering all of the plants. So we're going to start down here. We're going to look at what we call budgeted information for all of our costs. Remember, we're only looking at costs and not revenue. So we have budget information here. Here's my actual, and then over here we have what we call over or under budget. So we're actually looking on this type of screen. We're going to be going across. So I budgeted 58,100, but my actual was 58,000. So I'm under budget by $100. So each line item is going to be going across here. So I'm either over or under, and by how much. So I'm going to add up this, and I'm going to add up this. And here I'm going to be over budget by this much, and I'm under budget by this much. So this information here will be sent to the plant manager for Plant A. And here I have the plant manager's report. He's got Department 1, Department 2, Department 3. Remember, we're only looking at Department 1. So the Department 1 totals here are now brought into here. So here are the cost, budgeted cost for Department 1. Here's the actual, and my net is that I'm actually over. So again, you're going to compare budget to actual. Am I over or under, and by how much? And then I'm going to add these columns down. So here we are, Plant A. These are my total numbers for Plant A, right here. So notice here I'm over by 3655, but I'm under by 800. So I'm going to net these numbers out. I'm going to subtract. I'm going to add 3655 and subtract 800, and my total net will be 2855, which goes here. And notice these numbers right here are going to go in for Plant A. But remember, they started all the way down here. So we kind of work our way backwards. And so this is actually an example of a responsibility accounting report for a cost center. Next, on the next video, we'll be examining what we call a profit center.